Hey everyone, we need to talk about what just happened to silver. In the last 24 hours, silver slid to $81.64, down about 1.9%. And I know that doesn't sound like a crash headline move, but in the silver market, nearly 2% in a day is the kind of shove that changes how traders behave for the rest of the week. Here's the part that hits home. If you're holding, say, 100 ounces, maybe physical, maybe through an account, that move is roughly $160 of value that just vanished on paper in a single day. And if you're holding a bigger stack or you're trading paper silver with leverage, that same move feels a whole lot bigger, a whole lot faster. Gold, by the way, barely moved. Gold is sitting around 50.48, down only about 0.2%. That difference matters because it tells you something important. This wasn't a everything precious metals got slammed day. This was a silver-specific squeeze of emotion, positioning, and liquidity. And once you see the three forces that collided to push silver down to 81.64, you'll understand why the next move could be even sharper. Either a snapback that shocks people, or a deeper flush that catches late buyers completely off guard. Now, this isn't just normal market behavior. Let me show you the three things happening right now. First, silver is the metal that gets punished first when traders get nervous. Silver is part precious metal, part industrial metal. That means when fear creeps in about growth, about risk appetite, about maybe we overdid it, silver gets treated like the messy cousin. It doesn't matter how bullish the long-term story is. In the short term, silver is where traders hit the eject button because it's liquid, it moves fast, and it gives them quick relief. So a one-day drop like this is often not about new information at all. It's about positioning. It's about people who were leaning the wrong way, and they all tried to fit through the same doorway at the same time. Second, the silver market is thin compared to what most people think. People talk about silver like it's a giant ocean of liquidity. It's not. It's more like a river. On calm days, it flows fine. But when everyone turns the same direction at once, price has to jump to find the next buyer. That's how you get these days where silver feels like it's slipping all session, even if the news cycle looks quiet. It's not quiet inside the market. It's crowded. Third, silver loves to whipsaw because it lives in the crossfire between gold and the dollar. When the dollar firms up, or when rates expectations shift, or when traders start thinking maybe the safe haven trade belongs in gold, not silver, silver gets sold as the weaker link, even if gold holds up. And that is exactly what makes today's move so revealing. Because gold barely flinched, and silver still dropped nearly 2%. That's a message from the market. It's telling you silver is being treated as the risk-on version of precious metals right now. And when that happens, the next move, up or down, tends to be fast, violent, and emotional. Now let's stack the evidence because I don't want this to be vague. I analyzed the price action, and what jumped out at me immediately is the psychological number we just fell through, $82. That number matters because people anchor their expectations to clean levels. If silver is above 82, it feels strong. If silver is below 82, it feels like the floor is cracking. That's not science, that's human behavior. And human behavior is what moves markets in the short run. Silver sitting at 81.64 tells me sellers were willing to hit bids into weakness instead of waiting for a bounce. In plain English, that's urgency. That's not, I'll sell a little. That's, get me out. Now here's the next part that matters. Whenever you get a drop like this, everyone starts asking one question. Is this just a shakeout, or is it the start of something bigger? That question gets answered by how price behaves around the next obvious magnet level. And for silver right now, the magnet is $80. Not because it's magical, but because it's round, it's clean, and it's the kind of level where buy orders tend to cluster. Traders and investors who miss the move up often say, if it ever gets back near 80, I'll buy. So if silver drifts toward 80 and then suddenly snaps higher, that's what a healthy shakeout looks like. But if silver punches through 80 like it's not even there, that's when you start hearing the word cascade. And a cascade is when selling triggers more selling. Not because the fundamentals changed overnight, but because positions get forced out. Now let's talk fundamentals, the real supply and demand picture, because this is where people get tricked. When silver drops a couple percent in a day, the crowd assumes demand is dying. But silver is not just a jewelry or fear metal. It's deeply embedded in industrial demand. It's used in areas where the metal gets consumed. It doesn't just sit in a vault forever the way a lot of gold does. And that's why silver is so strange. The long-term story can be bullish, while the short-term price action can be brutal. You can have strong underlying demand and still see a fast drop because price is not only about fundamentals, it's also about liquidity and leverage. Think of it like real estate. A neighborhood can be great, growing, full of demand. But if too many people are trying to sell their house in the same week because their loan resets or they got spooked, prices still fall. That doesn't mean the neighborhood suddenly became worthless. It means the market is clearing inventory. That's what silver does. It clears emotion. Now I want to bring in institutional behavior, because this is where you can separate noise from signal. Smart money moved before the crowd noticed. When institutions lean towards safety, they don't always express it by buying silver first. They often express it by buying gold, because gold is the cleaner hedge. It's less industrial, less growth sensitive, less prone to getting jerked around. So when you see gold barely down and silver down nearly 2%, one interpretation is that institutions are still comfortable holding the core hedge while traders are dumping the more volatile cousin. In other words, today looks like a rotation inside the metals complex, not an abandonment of metals, a preference shift. And if that's true, it creates a setup where silver can feel weak right up until the moment it rips higher. Because the moment fear cools and risk appetite returns, silver tends to catch up aggressively. Now, we've seen this exact pattern before. Back in early 2020, silver got hit hard in a short window. It wasn't because the long-term story disappeared. It was because the world went into a liquidation phase. Anything that could be sold was sold. And silver, because it's liquid and volatile, got dumped. Then something happened that people always forget. The rebound wasn't polite. Silver didn't gradually recover. It snapped back, and it snapped back fast. Because once forced selling ends, you get a vacuum. Sellers are gone, and the next wave is buyers who were waiting for the flush. That's why these down days matter, not because they prove silver is dead, but because they reveal whether the market is in a forced liquidation phase or just a normal pullback. And the psychological sequence is always similar. First, people get excited, then they get confident, then they get overexposed, then the market slaps them, then they panic, then they swear off the trade, then price reverses when the last emotional seller is exhausted. That's how this movie goes. So where are we right now? Silver at 81.64, down nearly 2%, while gold barely moved. This looks like we're in the slap phase, maybe moving toward the panic phase, depending on what happens next around 80. Now let's make this personal, because the way this impacts you depends on how you're exposed. If you're holding physical silver and you're not leveraged, a one-day move like this is mostly a psychological test. It messes with your confidence. It makes you question whether you were early, whether you were wrong, whether you're the only one still holding the bag. But if you're holding paper exposure, anything that behaves like a trading instrument, these moves can create forced decisions. And forced decisions are where people lose money. Not because they made a bad long-term thesis, but because they got pushed out at the wrong time. Here's a simple example. Let's say you hold 1,000 ounces of exposure through a product that tracks the price closely. A 1.9% move is roughly $1,500 to $1,600 of swing in a day. That's not theoretical. That's real. Now layer on the real world. People have bills, people have margin, people have risk limits, people have fear. So even if their thesis is silver is going higher over the next year, they might still sell today because they can't stomach another 2 or 3% down tomorrow. That's how markets transfer wealth. They transfer it from the impatient to the patient, from the overlevered to the underlevered. And that's why I keep saying the next few sessions matter more than today's headline. If silver stabilizes and reclaims 82, you're going to see a lot of people suddenly act like they never doubted it. If silver slips to 80 and breaks cleanly, you're going to hear people proclaim the bull case is over. And historically, that's when the best opportunities tend to show up. Not always immediately, but in the window after the emotional flush. Look, the question isn't whether volatility continues. The math is clear. Silver is volatile because it sits at the intersection of fear, industry, and leverage. The real question is, are you positioned for what comes next? Right now, silver sits at 81.64, gold is around 50.48, and the next week will help decide whether this was a simple shakeout or the start of a deeper move that forces a lot more selling. This is educational content, not financial advice. Do your own research. Consult licensed financial advisors before making investment decisions. These are market observations and analytical frameworks, not buy or sell recommendations. But the data tells the story. All right, before you go, 3 quick things. 1. Drop a comment below. Tell me where you're watching from and give me your prediction. Where do you think silver is headed by the end of this week? 2. If you're not subscribed, hit that button now. I'm putting out unfiltered analysis consistently, and listen, I'm fighting copycat channels stealing this content. If this video provided value, comment data over hype, so the algorithm knows you're here for the original. 3. Next video drops soon, and I'm covering the one indicator that tends to flip right before silver makes its fastest moves. Last time it lit up, the move afterward surprised almost everybody. You won't want to miss it. See you there.